Actually, I decided to change the tagline of my talk a little bit. So I thought I will actually talk about Kerala's moment. And while I've been traveling to Kerala very often, this is the first time I'm attending Huddle. So I must say that it's very, very impressive to see the quality of startups, and not just the quality, both quality and quantity of startups, and also the quality of investors and the passion with which the people are contributing to the startup ecosystem here. And I believe that this is not just a conference, but I think this is actually a turning point in the journey of Kerala as a startup ecosystem. And let me talk about what I'm going to cover. Actually, I'm going to broadly talk about Kerala's snapshot and India VC 2025 and beyond. Interesting VC trends which might be relevant for startups especially, and the deep tech evolution and IVCAP approach and how this is important and relevant. Endowment model, which is actually very important, and I thought this is the core of my talk, because I think something which we've been believing in and very passionately working on and supporting. And also giving a little bit on the founder playbook, given the fact that there are mostly founders around here. Now, something very important, I think most of you probably already know, the Kerala startup ecosystem has actually grown quite substantially. And I think in 2025 itself, we are talking about 147% surge in startup ecosystem value. And I think we are building a very strong base of talent and diaspora. But I think the important thing to note here is that there is a challenge which is there still in terms of the gap that exists as the startups scale up. So we are seeing a gap at Series A, Series B stages, which actually is quite interesting. I think I usually look at the example like the traffic on Bangalore roads. You know, it's like the vehicles getting on the road and not being able to move because there are not enough wider roads, which is like a Series A, Series B capital, accelerating the growth of the startups. And I think in that sense, there's a bottleneck. There's a lot of clogging of the startups actually at the early stages, but not getting enough capital to really go beyond a certain stage. And it's not about talent gap. It's about acceleration of the startups, which is actually something which I believe, if actually addressed properly, and I think over a period of time, we will see this gap also getting addressed. So which is something I believe is required from the current situation perspective. Now, if you look at the Indian VC ecosystem, 2025 and beyond, and if you look at the early stage funding itself, we're talking about this going to almost $45 billion over the next decade or so by 2033. And a lot of this growth is actually getting driven by tech sector. Also, you will see the capital becoming very selective. There will be more quality over quantity. So obviously, that's going to be the key challenge in terms of the startups. Therefore, obviously, they'll have to make sure they become very smart in raising smart capital. In fact, in 2024, IVCAP raised 2,100 crores, which was the largest domestic capital raise. And so far, it's the largest domestic capital raise, which is actually something, another interesting trend, which talks about the domestic capital actually building up quite substantially, which is again good news for the founders. There is alternative capital building up in India, so which is something very, very interesting to know. Now, the trends that are important for the founders especially and the ecosystem to know is basically there's some interesting trends that are emerging in the Indian VC ecosystem, and I'll highlight some of them. There are new AIF models which are emerging. Now, when I say new AIF models, of course, the AIF regime came in 2012-13, and obviously we see broader categories of AIF 1, 2, and 3. But now we are seeing further alternative modes of capital, including venture debt, secondaries, and others, and further kind of detailing into sector-focused funds or deep tech-focused funds or AI-focused funds. So which is actually becoming more and more interesting because that's also bringing a lot more domain knowledge into the system. And I think the important part, which I talked about earlier as well, is the growth of domestic capital, which I think is a very interesting trend because we are seeing deeper pockets of capital getting created in family offices, insurance, banks. In fact, at IVCAP, we've raised the majority of our capital from institutional investors. These are banks, insurance companies, various government pockets, even state governments like Government of Odisha have invested with us. And this is only going to grow. Now we're going to see pension funds, for example, are also opening up to invest in this asset class. The other interesting thing which has happened in the last 5 years, I would say especially, is the improvement of the exit environment. We've seen almost in the last 5 years about 375 IPOs raising about $80 billion. That's not trivial. And I think this is something which is showing how the Indian IPO market has actually significantly scaled as compared to other countries. Of course, in fact, 2024 was actually a major elections year across the world. Almost about 40 countries around the world have actually gone to elections. Indian IPO market was the only market which was open that year. And we've seen very substantial IPOs happening. One of our own companies, Bluestone, went IPO earlier this year, and we are going to see the pipeline building up further. And another important point, which actually I would like to highlight, is while something very interesting has happened. When I started IVCAP, there were only 8 funds in the country at that time. I'm talking about 2011. And today, there are about 1,500 registered venture capital funds. If you go to SEBI website, you'll see over 1,500 funds registered. And almost half of them are still raising their first-time funds. Of course, there is going to be a little bit of, while on one side it's very good that a lot of funds are coming into the market, at the same time, it's not going to be that easy. You will see consolidation happening, especially because almost 30% of the funds will find it hard to sustain. So you will see some of these funds getting consolidated with other funds, and therefore, while the numbers might change over time, I think you will see a lot more intelligence and smartness in the VC funds and a lot more domain understanding, and therefore a lot more value to startups. Now, one important thing is, and I bring the Kerala context, is because globally, if you see, the startup ecosystems have actually developed in hubs across the world, either hubs around the universities or hubs across different pockets of areas like, for example, Bay Area, Tel Aviv, Cambridge University. So these are some of the examples where you will see talent density and leading universities coming together, and the startup ecosystems flourishing around those. And these have been anchored by corporates and procurement pathways, and that's actually very important from a startup perspective, because you not only need capital, you also need your initial customers. You need a support system, a lot of mentorship, guidance, etc. So that gets built around those ecosystems. And of course, you also need a lot of early stage angel and micro VCs, as well as accelerators, which actually develop across those hubs. And then, of course, bridging the gaps between translational labs and the research to product bridges. And that's what I'm seeing today actually happening with Kerala, actually becoming one of the hubs, and not just a hub in India, but becoming a hub at a global level. So this is actually quite exciting, and that's the reason I thought it was important contextually to show this, that it has actually grown over time. And the other important thing which I think Kerala is also doing right is actually nurturing the deep tech startup ecosystem. And I think we are seeing actually the trends are getting very interesting. We've actually seen a peak of investments happening, but now we are seeing, and these are actually just one particular quarter comparison numbers, just to give a context of how the startup investments in deep techs have actually emerged over time. And the average ticket size is actually growing again, which is good news, which means the earlier point which I was talking about, the bottleneck of Series A, Series B funding, given the size is actually growing per ticket of investment, that's good news for the startups actually raising their larger rounds of Series A, Series B, and even going to Series C. And the other interesting thing which we are noticing is that the trend is shifting from spin-outs to corporate pilots to scale. So, of course, quite a few startups still in that TRL 1 to TRL 9 stages. I think we are seeing a lot of corporates participating, and therefore a lot more focus on scaling these startups. And there's a focus on stronger translational funding, and I think this is something which is very important from deep tech's perspective. And from a overall growth perspective, I think defensibility of startups is very important. That therefore, focus on IP becomes very critical, and that's why deep tech startups, whether they're in the area of robotics or AI, machine learning, semiconductors, robotics, and the, of course, Industry 4.0 areas are actually quite interesting how they are building up in this country. Now, this is something which I wanted to highlight, which is something very important, and a model which is the foundation of IVCAP's overall model. I wanted to also highlight on the definition of endowment and how the endowment effect works. You know, it's actually an emotional bias that causes individuals to value an owned object higher and often irrationally than its market value. So what does it mean? So when you have attachment with something, when you believe that you've reached a point in your life because an educational institution or the place you come from, the place you belong to, has actually contributed to your success, you want to really give back to that place. And that's the whole idea behind endowment. So IVCAP's entire model is set up based on an endowment model. In fact, you know, a significant part of our profits from a fund, so 25% of our fund, one carry, the profit that we make actually goes back as endowment. And we help set up India's first endowment fund at IIT Delhi. And of course, it's a long-term corpus creation, and it also comes with a lot of mentorship and grants. So it's not just the capital, it also comes with the talent. People are very passionate about giving their time to support the value creation with that capital. So that's something which is important. And I thought I'll draw the comparison with what Kerala can do as a model and draw from that example of IVCAP's endowment model. It's actually creating a Kerala endowment blueprint. Of course, we know that Kerala has one of the largest diasporas around the world. So, you know, when you think of Kerala, it's probably you need to think more from the broader perspective of Kerala citizens abroad, and you see where all they are based. And as you can see, there is the largest base in UAE, and there is in Saudi, and then there are obviously a lot of these other places where these citizens belong. And there is an opportunity for us to really bring that together onto a single platform through that emotional connect with the state, and actually build a grant model and create a structure around it, which actually gives them a lot more confidence and trust to put not just the capital into the state, but also support with their experience and intellectual capital to drive the growth of the startup ecosystem and the overall state. And if I just looked at some of the math, it's very interesting. And of course, Kerala stands at one of the top states in the country receiving remittances. And I think that also indicates the fact that the people outside of India are actually wanting to give back. Look at these numbers are not trivial. 4 million plus global Keralites. We're talking about 37,000 crore annual household remittances. And if you were to put a structure around it, and even 0.5% mobilization could actually lead to almost 185 crores of potential corpus. And I'm just talking about 0.5%. If you gave a proper structure to it, this 0.5% could actually become 5% and further could grow. And that's an annual potential, right? So something like this could actually bring not just capital, but imagine the kind of talent that comes along with, which actually is something which I thought I should highlight. Now let me switch slightly to kind of, giving some pointers on, because a lot of founders sitting in this room, and I was asked this question many times that people want to know, what do we really look for when we make investments? And I think typically most of this is actually known, but I would still highlight, founder market fit, scale of the industry, unit economics, clarity, defensible models, capital efficiency, governance and ESG readiness, and can we add value? And I think the last one is something which is very important from a venture capital perspective. We don't make any investment unless we actually believe that we can add value, and that's why we like to work very closely with the founders, many times like co-founders with these founders. So it's very important, and because our model brings together the global IIT alumni on a single platform through an endowment model, we get the opportunity of getting not only their capital, but also their time. So there are about 500,000 alumni of the IITs around the world who actually work with IVCAP and not only put money through our funds. About 6,000 crores is our corpus that we manage today. 20% is IIT alumni capital from around the world. And it's not just that capital effect, it is a value that comes along with that. And that's where we look at the value that we can add. And that's how we have built our portfolio. Broadly, three themes. We look at the India consumer and growth story. We look at deep tech and emerging tech, and then India for the world. These are broader three themes. But as you can see at the center of it, you see the IIT Endowment Fund. And around that, the global alumni ecosystems. And then that's how, some of these companies you might have heard of, Snitch, Purple, Bluestone. These are the companies we would have come in at very early stages of their growth. Purple, for example, we invested 15 crores at very early stages. We were probably the largest shareholder in the company when we invested in the company. We were owning 30% of the company at that time and scaled it up. Today, as you all know, it's a unicorn, with $1.3 billion valuation. And of course, there are many other examples like that. And even in the India for the world story, we're actually looking for Indian entrepreneurs catering to the global markets. And there are quite a few interesting examples there, like LUC Data, which is a drug discovery company catering to the global pharma companies and biotech companies. Agraga in the cross-border logistics. Bijli, which is smart electricity, and so on and so forth. And obviously on the deep tech and emerging tech, we are looking at robotics, semiconductors, space tech, defense tech, and other areas. And here are some of the examples of the investments that we made. From a founder's perspective, and I think it's very important. So if I'm the founder, how do I really look at getting my act in the right place? And I think it's very important to have very clear vision and milestones. And then, of course, you need the right team and the resilience. And I think it's very important that irrespective of how the market treats you, in terms of the investor community especially, you should have the ability to stay focused on your course. And as long as you are focused, you will get there. And I think we have many examples where people, after multiple rejections, have got their first rounds and still became decacons. Then, of course, the governance mindset is actually non-negotiable. I think if you have this mindset right from day one, I can tell you that you'll always get a premium in the market. And then the investor alignment is very important from early stages. Getting the right investors on board is even more important than just getting your valuation in place. And purely from a valuation perspective, and also how you plan your milestones, and I think typically this is how the founders can look at it. Typically, you look at milestone-driven funding, and at the seed stage, think of a 12 to 18 months kind of a runway, and at Series A, you shift to 18 to 24 months, and dilution, many times people have this thing about dilution, but I think you have to weigh in what kind of acceleration of growth you're looking at. Is it just a percentage dilution, or you're getting value which is accelerating you at a different pace? And then, of course, coming back to the original point of Kerala's moment, and I think I do believe that if there is a proper alignment of capital, talent, and procurement to create repeatable exits, I think Kerala is actually very uniquely positioned, and also very, very opportunistic areas like deep tech and agri-food. And of course, there are many other areas like health tech is another one, big one, that Kerala has an opportunity to build upon. And of course, this partnership model and the endowment model that we talked about is something that I would personally like to get involved, and I think something I would love to partner with the government here to actually see if I can contribute as well in that. So with that, let me thank you for the time and your listening. And if there are any questions, maybe one or two questions, you think there's no time, or make it, no worries. So maybe I'm available, I'm outside, so happy to take any questions separately. Thank you so much.